Hey and welcome to a new video. Today we talk about one of my favorite patterns and how we can use it to find great reversal trades. So for that we look at the US dollar Canadian. Was a great example before earlier this year where price made this huge rally and then sold off and completely reversed into this multi-month sell-off. And now we want to answer the question, why did price reverse here and why did it not happen before? So for that we need to look at trend analysis and momentum analysis. We can see that there were two massive waves during the trend and a consolidation in between. But why did price not reverse here? Now let's zoom in a bit and take a closer look at what has happened here. You can see that price was trending upwards and it was respecting the moving average very nicely. By the way, I used the 20 period, the simple moving average, which works very well during trends. And then now here, as price moved into this top, we saw this triple top with 3 failed breakout attempts. You can draw a resistance line here, and you can even see that price tried to break to the downside, but it just left the wick and immediately got rejected as well. It never really broke the moving average in this market top. It just consolidated sideways, and as we will all know, during sideways consolidations, the moving averages don't count anymore. Then we just saw this sideways consolidation or wedge or flag or whatever you call it, and the price did not go anywhere. But we can also use our Rsi indicator as further confirmation. As we've seen in the last video, the Rsi analyzes momentum, and a divergence on the Rsi can foreshadow reversals. But here you can see the Rsi made a higher high, but the price made a higher high as well, so they are in sync, do the same. And this is a convergence and not a divergence. So this would have already told us that price is not losing momentum here on the way up. Then now let's take a look at the second wave. Again, price respected the moving averages on the way up. It tried to break it once here to the downside, but immediately got rejected with a very strong candle. And as we'll see later, this was not a very good breakout when we compare to what has happened here. Here it tried to break it as well, but immediately got rejected. It never even closed below it, and then it moved into this double top, which looks like a failed breakout. If we draw a resistance line, then also what is a very nice confirmation is a price pin bar here. And when this happens at market top, it's a very important clue. Also, if you can see an engulfing candle, this can also confirm a potential reversal. And then immediately after this pin bar, price showed these 4 bearish candles, which with an increasing size, and the break of the moving average was very strong with a lot of downside momentum, and it was very different to what has happened here, where price only showed this small candle, and here as well with very little bearish momentum. So this was already a good indication that something in price had shifted, and that the buyers were not trying to hold price up anymore. But we can also use our Rsi indicator again, and you can see that the Rsi made a lower high here, whereas price made a higher high on the way up. And this is a classic divergence where price is losing momentum and the Rsi confirms it. So that's another clue to the puzzle. But we can see even more, and this is a very important clue that we don't get very often, but when we get it, it's great confirmation of the trend reversal. So here, after price broke the moving average, it consolidated sideways for a bit, and then it made another run at the moving average. It tried to break it, but it got rejected here, and the moving average held very nicely. And immediately after, price sold off very strongly into this sell-off. So the break and retest of this moving average is a very important pattern that you will see often on the breakouts, where although they don't come as often as the divergence, but when you get it, you know that you're looking at a very strong sell-off. So, and as you can see, there's a big difference between those two trend waves and between those two market tops. And if you pay close attention, you will see this pattern over and over again across all forex pairs and across all time frames as well. So you can use this pattern to either exit your trend following trades. If you're a trend follower and look for market tops, then you know if you see something like this, a reversal is likely to happen. Or if you're a mean reversion trader like I am, you look for this pattern to time your entries into reversal trades into the opposite direction. And that's basically it. I hope you enjoyed the video and you learned something. And if you have any question, just leave a comment below the video and I'm very happy to help you out.